Hello there, and welcome to a discussion about the only debt elimination strategy you need. Are you tired of feeling weighed down by debt? Does it seem like no matter how hard you work, your loans and credit card balances keep piling up? Many people manage their finances without a clear system, and without specific measures, it's hard to know if you're truly progressing against debt. Often, folks treat their personal finances like a black box. Money in one side, money out the other, without really looking at what's happening inside. This vague approach can lead to surprises later on, like unexpected bills. When you don't fully grasp your financial health, you might be missing out on opportunities to reduce debt. Relying on vague impressions or outdated information about your debt situation often leaves excessive debt unchecked. Failing to spot a small error on your credit report might lower your score more than you think. Ignoring your credit details can be a costly mistake. It's a common misunderstanding to just glance at bank balances or consider only major debts when thinking about financial health. This narrow view can lead to missed opportunities and hidden risks. While you might have a healthy checking account, ignoring less obvious liabilities like small loans or even the market value fluctuations of your assets can skew your overall picture. Robert Kiyosaki in Rich Dad, Poor Dad stresses the importance of understanding the difference between assets and liabilities, a lesson many overlook. Dave Ramsey, in his work The Total Money Makeover, also emphasizes that ignoring your credit details can be a costly mistake. Recognizing every debt, even small ones, helps you see where your money is committed. Building wealth isn't just about having money, it's about ensuring that what you own works in your favor. Without a complete map, you might be overestimating your strengths and underestimating potential risks. Debt itself isn't inherently bad. It's manageable when you know what you owe. Understanding the cost of your debt by looking at interest rates and payment terms is crucial. Ignoring this vital information means you risk poor financial decisions that could cost you thousands over time. So, how do you move from feeling overwhelmed and uncertain to having a clear path forward? It starts with a comprehensive understanding of your debt obligations and credit health. It involves dissecting the details, not just relying on vague impressions. It requires a systematic approach to analyze and review. You need to understand what constitutes your debt, from secured loans like mortgages and auto loans to unsecured debts like credit card balances and personal loans. Understanding the nuances equips you to negotiate better terms or prioritize repayments. You need to understand the importance of tracking your debt level as a key performance indicator, calculating your debt-to-income ratio to understand how much of your income goes towards debt payments. Experts suggest keeping this ratio below 36% is typically a good benchmark. Recognizing your debt obligations and understanding key credit metrics are vital steps. Planning for improvement by identifying high-interest debts and formulating a repayment strategy is essential. Regular reviews are key to staying on track with debt goals. But how do you integrate all these pieces into one cohesive, actionable strategy that actually works for you? How do you move from analysis to taking control? Clarifying objectives matters because far too often, personal finance journeys stall when there isn't a clear vision. Without specific objectives, you risk drifting without direction, unable to pinpoint which steps will propel you forward. And a clear set of objectives transforms your journey from a vague desire into a series of milestones that are both achievable and rewarding. The journey to financial success isn't a single dramatic leap. It's a series of deliberate, interconnected steps. Without a clear roadmap, you might find yourself repeatedly bumping into obstacles or even retracing steps. Without a structured plan with clear markers and regular check-ins, even well-laid plans can falter because execution is left to chance. This gap between strategy and implementation leads to missed opportunities and stalled progress. Many people struggle because they haven't set measurable targets or scheduled regular reviews. If you're ready to stop feeling overwhelmed and start tackling your debt with confidence, you need more than just random tips. You need a structured blueprint. a clear roadmap that breaks down the process into manageable phases and actionable steps. If you're interested in learning more about a proven framework for achieving debt freedom, you can find a detailed video linked in the description below. Thank you for watching. If you want to discover a complete step-by-step debt elimination strategy that helps you take control of your financial future, you can find the link to the course to know more about the topic in the description. Like this video, share it on your social media, and subscribe to the channel now. These simple actions are crucial steps in building our community and your financial success. But how do you integrate all these pieces into one cohesive, actionable strategy that actually works for you?